I saw a fascinating article in the newspapers yesterday, and almost a half-page color advertisement from the Indian Income Tax Department calling attention to taxpayers holding foreign assets and earning foreign income to fill foreign asset, foreign source of income forms in their ITR tax returns by 31st December 2024. And this got me thinking about what, why, and what are they trying to do. Almost all the major newspapers also carried articles about this, and it raises a number of questions more than it answers it. So let's look at what they're trying to do. The Indian Income Tax Department launched a compliance come awareness campaign, right? And they're asking taxpayers to report foreign assets in their assessment 25 returns, noting that a failure to disclose it can lead to a 10 lakh rupee penalty. According to them, Indian residents, um, foreign Indian assets would include bank accounts, cash value, insurance contracts, annuity contract, financial interest in any entity or business, immovable property, custodial accounts, equity and debt interests, trusts in which a person is a trustee. In addition, all eligible taxpayers must mandatorily file the FA, foreign assets or foreign source of income schedule in their ITR, even if their income is below the taxable limit. Now, what they say is failure to disclose foreign assets will attract a penalty of almost 10 lakh rupees, about $12,000 under the black money, that is the undisclosed foreign income and assets Imposition of Tax Act 2015. The purpose of the campaign is to remind and guide those who may not have fully completed schedule of foreign assets in their submitted ITR, especially in cases involving high value foreign assets. And they say the last day to file a belated revised ITR is 31st December. Now, this is pretty interesting, right? So let us look at the categories of Indians with foreign incomes and assets. Those are the top echelons of the societies, including business leaders, top industrialists, the owners of businesses, CEOs, A-list film stars, and the mega political clans. And they are always in the news for the wrong reasons. For example, earlier this year, the UK decided PM Rishi Sunak's wife, Akshita Murthy, failed to file her UK returns that included her income from Infosys dividends, almost millions of dollars of dividends. Similarly, Prajwal Revanna from the famous political clan in Karnataka fled to Germany for months at an end on a diplomatic passport when he was about to be arrested for a rape case, alleged rape case. Now, how the hell he traveled abroad on a diplomatic passport, and how did he have the funds to live and sustain himself for months in a foreign country? Obviously, they had foreign income and assets. Now, Talapati Vijay, the film star Vijay, reportedly refused to pay almost 12 crore rupee tax on a Rolls Royce Silver Ghost. And of course, he went to court. The court ordered him to pay it after a bit of courtroom drama. And eventually came in news that he is selling that car. Now, the other category of people with foreign income or foreign connection is the large middle class. Almost every second, third, or every fifth middle class family will have a member living abroad. So they will have some remittances coming in. A vast majority of techies who went globe-trotting during the past couple of days. Former NRIs who returned to India after extended stints abroad, they may have retained the bank accounts or retirement funds in their adopted homelands. And then there are a bunch of expats living and working in India, including former seafarers and others. But they may still have assets in their home country. Gig workers earning from online platforms like Fiverr, Upwork, etc. And then There is the bottom of the pyramid category, a category of immigrants and migrants who migrated illegally and sometimes returned back to India, and the large army of migrant workers who slog it out in Gulf and other emerging markets as workers, eventually returning back to India with meager savings. Here is the big fish, uh, the one that the income tax department is targeting, will easily slip through the cracks. There are a bunch of Indian farmers who are really rich. The rich Indian farmers, by default, do not pay income tax because agricultural income is exempt from income tax and not included under the total income. So will they or will they not come in under this ambit even when they have millions stashed away in foreign countries? So what about the vast majority of politicians with black money who claim to be agriculturists and farmers? They will also be stashing away all their funds, like the Deve Gowda family we talked about. Their family is predominantly agrarian, agriculturists, although they make huge amounts of money from political deals, but they do not pay any tax. Likewise, corrupt bureaucrats, their cronies, the government contractors, agents, and middlemen, many of them send their kids and families abroad to study and live there. They, of course, do not pay any income tax on that money. They will certainly slip through the cracks.